As Japan embarks on a massive rebuilding program, which sectors will benefit and how can you invest in their reconstruction? Joining us now is Tom Lydon, ETF Trends editor, and Jeff Sott, chief investment strategist at Raymond James. Gentlemen, thanks for joining us. Jeff, this is a country that has bounced back before with a government that isn't afraid to spend a lot of money to get things rolling again. Where do you think is the best place to invest? Where do you think that we will see the most reconstruction first?
Well, provided there's no nuclear meltdown, I think a company like Sumitomo Cement makes a lot of sense. For obvious reasons. You've got Furukawa Electric, which produces things like wire and cable, which obviously needs to be rebuilt in the infrastructure. And then you've got a Caterpillar lookalike called Komatsu over there with heavy equipment. They're also a second derivative play on China.
Tom Lydon, look, I want to echo Melissa. Japan has come back before. This is a great country, and it's a great business country. So when you look at the shutdowns now, I mean, Simon Howes was talking about Toyota, Honda, and others. When and if the power is turned on and they resume, Tom Lydon, wouldn't you want to get back into ETFs that can take advantage of a Japanese resurgence?
Well, absolutely, Larry. I mean, all stocks are being sold off. Even though the Japanese market was down 6.2%, Japanese ETFs today are trading down 10%. So we continue to see sell-offs, but as you know, and as you say, Japanese markets and people are resilient. There's $12 trillion in debt, and they're talking about maybe $180 billion in damage. And if the damage is contained in the nuclear power plants, that's some debt that can easily be absorbed by the Japanese government and people. And I think these ETFs, the Spider small cap, is excellent, especially as you have opportunities with small cap companies that are easily able to ramp up during times when things turn around.
Yeah, Jeff, I mean, at the same time, there is bound to be a contraction as we're watching machinery idled for some period of time. How long do you think that lasts? How big of an impact do you think it has on the company's GDP?
Well, I think you'll get a slight blip.
Pardon me. Go
yeah,
ahead.
Japan. It affects notionally somewhere around 7 to 8% of GDP. Again, provided there's no nuclear meltdown over there. But Japan, a lot of comparisons are being made to the Kobe quake, and it's a whole different country right now. Valuations are not nearly as high. In fact, Japan is one of the cheapest countries out there, and small cap is even cheaper than the headline big line companies over there. So again, provided there's no nuclear meltdown, I think Japan is interesting.
Tom, just to Jeff Sott's point, look, valuations are much lower today than they were back in '95. And Tom, we know the Bank of Japan is putting in as much liquidity as necessary, and we reckon that the government will also provide whatever is necessary for infrastructure support. Now, question, regarding the ETFs you talked about a moment ago, what is the right timing for an investor? Should an investor stay out? There's obviously massive uncertainties. Is it too early to go in or not? How would you play that?
Oh, you're absolutely right. It is uncertain, and nobody can pick the exact day, Larry, but we've already seen over a 15% correction. And if you feel that there's containment within the nuclear power plants, and that's the big, major question right now. Now the country's getting back to making a plan to go forward. And I would say in the coming week, you're probably going to see a bottom, and there'd be a great opportunity at these levels.
All right, guys, I think we're going to leave it there. Thanks to both of you for joining us. A quick break, and then...